All right, hey everybody. We're gonna get started here in just a minute. I want to do uh, a bit of an emergency pop-up session, if that makes sense, because I think we've got a very interesting setup here coming up next week. So that's what we have in store here. I should put these back on. If you guys can hear me, okay, maybe just please give me a quick yes or something here in the chat box to make sure. I know this is kind of impromptu, and I know a lot of people are going to be watching the recording of this, but I just want to make sure that we're keeping everyone updated with what we are seeing here. So we'll get started here in just a sec. Alrighty. All right, very good. All right. Sorry, guys, just one sec. I want to make sure I get everything set up here. Okay. All right, perfect. Okay, so this is just a pop-up session here. Again, dare I call it some sort of like an emergency pop-up session. What I want to just do here for the next few minutes is I want to walk you through a specific setup that I like through the lens of education. Remember, we're not giving investment advice here, obviously, but something that I think could be very interesting to consider given next Wednesday's April 2nd tariff day. So let me walk you through this specific idea. Now, before we look at this idea, and I'll make the chart larger here. What we are considering right now is that we have April 2nd, a very well laid out date or telegraphed date that there should be more news around tariffs. Whether that happens or not, I don't know. But it's a specific date and specific type of news. So that type of an event we call a known unknown event. Many events that people can, in fact, most events that people can prepare to are known unknowns. Again, we know the date, we know the type of news potentially, but we don't know the specific news, and we certainly don't know how the market's going to react. So that type of a setup makes it, for those of us that live in the world of probabilities and like to put on, trades that actually have a good probability of working out, that type of a known unknown makes it very difficult to put on a position that is directionally exposed, unless one has some inside knowledge, which of course I don't, certainly not on this, and or one is willing to just make a pretty wild speculation, right? So we have a couple of options when that happens, and we're going to use the S&P 500 here specifically as the trade, because first of all, the news that we're looking for is obviously U.S. based news coming out of the White House. So the S&P 500 thus would be a vehicle that would make sense given its U.S. stocks, right? As opposed to using, I don't know, Chinese stocks for a proxy to this, which makes at the margin maybe a little bit less. Although actually, in this case, that may not be a good example because obviously tariffs are a global thing. So maybe Chinese stocks actually would make sense. But I think from a liquidity perspective, at the very least, the S&P 500 here makes sense. And so the way we kind of gauge this, and I'm typically not a huge proponent of the strategy that I'm about to show you, but in specific circumstances, such as this makes a lot of sense to me. So very specifically, what we're looking for is we're looking for this known unknown event to make a move that might be a little bit more than the market is currently pricing in. We're not looking for an absolute crazy melt up or a total meltdown to the downside, but we're looking for something that's maybe a bit more than some people are expecting. But again, we're not calling for like unbelievable moves. It's just maybe a little bit more. And so what we can do is we can do something called a straddle. And if you're not an options person, this might be something new. If you've ever used an option before, you may have heard of a straddle. Essentially, to kind of put it very simply, we can make a bet which could pay off, whether, in this case, let's say the S&P 500 goes up or whether it goes down. Now, you might say to yourself, well, Serge, doesn't that make a sense to do all the time since I never know where things go anyway, and you can just make that bet? Most of the time, it actually doesn't make sense because what we're looking for, A, is a pretty decent sized move, and so that needs a catalyst, a known unknown catalyst, and B, and so the timing is very, very specific. Right? It's not just the catalyst, but also we know exactly when that's coming on what day, or at least we're being told it'll be on that day. Whether it happens or not, again, I don't know, but let's assume that that actually will happen for a minute. So that's step number one. Are you guys good so far? Let me just quickly, I want to make sure everyone has a minute to kind of digest this, and then the second thing I'm going to show you right now is how we actually measure how much the market is currently pricing in the move might be. All right, so if you have any questions so far, let me know, and then I'm going to quickly just go into the second part here. Okay. So now that we know that we have a known unknown event, again, definition, we know there will be news. We kind of roughly know the kind of news. We don't know, of course, specifically what is the news in terms of like the specifics. I'm not sure anyone knows. And of course, we don't know how the market's going to react. We can make an educated guess. We can have our own opinions. But again, if we're living in the world of probabilities, which is what trading investing is all about, then it doesn't make much sense to do a directional trade, unless again someone has inside information, which I certainly don't. So now the second thing we need to do is we need to have some sort of an idea of how big could that move be. Okay. And so in order to do that, we need to go to the options market. And so I'm going to show you an options table here. Let me just quickly grab it for you guys here. I think I have to do this here. Yeah, here, okay. So what we need to do now is we need to get an idea of, oh, that's the wrong table, sorry. I'll have it for you. We need to have an idea of what is currently is the options market pricing for this, how big this move is going to be. And for that, we need to look at the options markets. I'm trying to bring you the options table here. Apologies for the delay. Okay. So very specifically, what we need to do is we need to look at essentially the latest options expiration, which is essentially next week Friday. I'm not going to use 0DTE for this. That's too crazy, in my humble opinion. But I'm going to use the weekly expiration option expiring on the SPY ETF, expiring next week Friday, which I believe is April the 4th. Correct, April the 4th. Okay, and so what I'm going to do is I'm going to have to price what's called the at-the-money straddle. That sounds way more complicated than it is. It's actually very simple. So what I'm going to need to do is I'm going to have to look at the at-the-money call and at-the-money put prices expiring next week Friday and add them together. And so right now the at-the-money price is 560 on the SPY. So right now the SPY is trading at 560, 560-ish, right? And so what I need to do now, as I'm going to make this a bit larger, I'm going to have to find the April 4th expiration date, which is this options chain, and the 460, did I say 460? Sorry, 560. What the hell did I just say? 560. Put and call added together. So the 560, here we go. So the 560 strike call is currently trading at a little bit less than $7. Put, and the 560 call is trading north of, say, $7. So let's say $7 a piece. Let's say roughly $14, maybe $15. Okay, let's round it up to $15. Okay, so meaning that the options market currently is pricing in for the S&P 500 by next week, Friday, so that's April the 4th, to be moving about $15 in either direction. I'm going to make the bet here that a lot of that movement is going to come from the tariff day announcement, April the 2nd. If that even happens, right? But that's right now what they're saying. So, we have to take it at face value. So if I take $15 and I add it from the current 560 price, that gets me to about 575, which is literally about right there at the upper end of this box. And if I take $15 and subtract it from the current price, I get to about, let's call it 545, which is also at the low end of this box. So essentially, it's possible, the options market is telling us that by next week, Friday, the options market, the S&P 500 is either going to move as much as above 575 or actually as much as towards 575 or let's call it 45, right? Now, if you think about this, what does it mean in percentage terms? And this is, of course, assuming that the S&P 500 is going to be at exactly this level coming into Tuesday, which is unreasonable, but more or less, I think this is a trade that makes a lot of sense here. So in percentage terms, essentially what the S&P 500 is pricing in right now is about a 2.8% move in either direction. Now that's actually quite a lot, but if we now look at, and I'm going to add something in here, it's called the average true range. And the average true range, which is the average sort of daily move, it's about 8 points. So right now, on any given day, the S&P 500 tends to move about 8 points. What the market's pricing in is 15 points. Now, that's, as you can do the math, that's almost twice as much. I would say, given the market's concentration and focus on that news, having had meetings here all week in New York with investors and hedge funds and all sorts of stuff, I would argue that's not an unreasonable thing to happen, which is another way of saying that I think a straddle here, not a recommendation, just educational, to me makes sense in small size. Remember, it's just a trade. We're not trying to butter our IRA in here, right? Or our retirement funds. It's just a trade. So I just want to really do this quick pop-up session here. I know it's only just been a few minutes or whatever it's been now, 10, 15 minutes. And hopefully this is something that is helpful for you guys when we do these pop-up sessions. I think this is an interesting setup. If you are a Trade Ops member, I'm going to be sending out an email with the specific of this trade. It might change a little bit by the time I get to it, so I'm going to wait a little bit more. But if you're a Trade Ops chat member, I'm going to send this to you guys by email here before long. Once we have a bit of a, maybe give another few hours or something like that. So again, hopefully this is helpful. Please give us a thumbs up, like to the video. Please subscribe to the channel. If you like this at all, if you give us any feedback, as always, that would be very welcome. And again, if you are a Trade Ops member, you're gonna receive this email by this trade idea by email once we have the specific idea mapped out. So again, thanks all for being here. Have a good weekend, and we'll see you back here on real soon in the next Set the Market show.